We detected an unusual trade on Rivian stock, ticker symbol RIVN. And what's also very unusual about this is that Rivian reports earnings in less than 1 month, February 20th. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying Rivian or bearish and selling Rivian, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, including leaked insider information, such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into our analysis. Now, as we can see here on Rivian's chart, if we pull a Fibonacci retracement at its low from its previous earnings over here or over here, notice that if we pull that Fibonacci retracement to its most recent high, that at the 61.8% golden ratio level, we found support here recently, and it has been going up. And so this could be a bullish signal based on technical analysis. But what are the wealthy investors doing? Because at the end of the day, it's the rich who have a lot more capital that actually move stock prices. Their buying and selling of stocks makes a much larger impact than technical analysis. And so let's dive into the analysis of those unusual trades made by this wealthy investor. As we can see here on the options, time, and sales tape, the most significant trade that we found was these February 21st options that were being done at about 10:42 at the 13-second mark for these 13.5 strike calls. And they were paying $117 each. Because keep in mind, we need to multiply by 100 since each option represents 100 shares of stock. And so when we take a deeper look at the option chain for these February 21st options, notice that at the 13.5 strike calls, there were 7,000 contracts being traded, and they were clearly opening trades since the open interest is much less. So we know these are new opening trades. And so if we estimate the total trade cost of $117 that they paid times 7,000 contracts, we get a total trade cost of about $819,000. But keep in mind, this is a higher risk trade in comparison to the trades that we share on our website. If you want lower risk, higher probability of profit trades, then go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We will put a link to our website at the top here where you can gain access to more stocks wealthy investors are trading for your portfolio diversification. Because not all of these unusual trades will be profitable. Even this one might be a loss. But as long as we diversify with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now, even though this is a higher risk trade, we still traded this, but we use position sizing to manage our risk. You can see here our position, POS stands for position, green means buy, where we also bought these call options, but we were able to get them for slightly cheaper because the stock did go down lower after that unusual trade. And so when we analyze this trade, you can see here on the risk profile profit loss graph, on the x-axis here is the share price of Rivian stock, where it's currently trading over here. And the y-axis is the profit loss. Note the zero break-even line. And so when the purple and blue lines are below it, it is a negative loss. The purple line represents the current date, and the blue line represents the date at expiration. And so if the stock goes up, you can see it becomes more positive profitable, because this is a long bullish trade, and we can confirm it on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta trade. But be aware of the risk on this trade. We have a negative theta decay here. And so as time goes on, these call options will lose value. And that is why the purple line drops down lower as time moves on. And so the break even of this trade starts to shift upwards all the way here at expiration, where the stock needs to trade above $14.47 for these call options to be profitable, even though these are the 13.5 strike calls. And so that is another reason why this is a higher risk trade in comparison to the trades that we share on our website. If you are interested in our option strategies that reduce risk, such as the time decay or our stop loss if you only trade stocks, then make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas than this one here. Comment below, what do you think will happen to Rivian after earnings? Do you think it will rally, or do you think it will crash down? As usual, please hit the like button, subscribe if you haven't. Take care and have a wonderful day.